What's up, guys? It's downtrends here, and today is day one of the free course that I'll be having here on YouTube for you guys to check out. So essentially today we're gonna be going over something very basic that every single day trader goes through, and that is learning trends. So trends are very simple. A trend is just simply when price tells you if it wants to go up or down or sideways, where it doesn't pick a direction. So you can think of trends as somebody walking to school and they have to go up a hill, they're in an uptrend. Somebody going down the hill, they're in a downtrend. And then if they pace back and forth, there is no trend, they're in a sideways momentum. So let's get started with why trends even matter. So trading has become much easier for me personally the moment I started analyzing trends and learning about them, because this way you know exactly where the market's thinking that price should go, and rather than betting on the opposite direction, you are now gonna be going in the same direction, hence making it easier on yourself. So imagine like you're going up an escalator and the escalator is going up, but you turn around and you're trying to go down. Every step you take is going to be matched with momentum going against you. So the same thing is in trading. If you start trading against the trend, it usually is going to be way more complicated on your psychology, on your P&Ls, on your drawdowns, and I just don't recommend doing that. So first things first, imagine like you're swimming in the ocean and the current is pushing you to the left, and you turn around and you start swimming to the left. Well, you're going to be boosted by it, right? So you're going to be able to hit your profit targets. You're going to be able to not be in drawdown when you're trading with the trend. But now if you turn against it, now you're going to have resistance meet you. You might be in more drawdowns. Your trades might play out, might not, depending if you were able to catch corrections at the right time. But I just don't recommend going against the trend, as I've tried it before and thinking you're contradictory, you're a contrarian, and it's not the ideal way of trading, in my opinion. So let's start with the uptrend, guys. So as you guys can see, this is a nice little visual for you guys, where we have a swing high, then a swing low. We have another swing high that's higher than the previous high, and we have another swing low that's also higher than the previous low. This is how you can pretty much analyze an uptrend. Same thing on the downtrend. So you have a swing low, then you have a swing high, then you have another swing low that's lower than the previous low, and now you have a swing high that's lower than the previous swing high. So you're going to be looking for higher highs in an uptrend and for higher lows. And in a downtrend, you're going to be looking for lower lows and lower highs. So same way if you go on up a staircase, right? Every step that you go higher and higher up the staircase. However, when you go to place your foot, you're actually kind of pausing at each staircase. That's the same kind of concept in an uptrend. Same way if you're going down the stairs. You're going down the stairs, every single step you take, you're going down, but you're not just jumping off the staircase and going straight down. You're taking a step in between each single time. So that is how you guys can look at uptrends and downtrends. There is a third one, which is what we call no trend or no trade zones. That is when price just comes here, and pretty much just does not know exactly where it wants to go. So you have to be careful when you guys are analyzing trends and you guys get caught up in these zones, because beginners will get eaten up here. You might think price is going a certain way, goes right against you right away, then it goes back in your favor, and these zones are very tough to trade. So I wouldn't recommend trading sideways momentum, essentially. So with that being said, there's a reason why we look at the trend, as I mentioned. You have to spot it. You have to spot the trend typically on the higher time frames. So if I can give you guys an example here, this is a real life example of a trend. So as you guys can see, we're making lower lows here. So this was a downtrend. Price was kind of aiming towards the downside. Soon as price broke those lows and we came here, then we started making a higher low, and now we were back in an uptrend. So this is a great example of how a trend can start reversing. you guys need to start differentiating corrections versus reversals. And we'll get more into that because that's typically how I trade. I like trading trend reversals and flipping onto the other side because I'm able to see where previous sellers were based off the previous trend, and that allows me to kind of take my trades more confidently and know when to exit and when to enter. But back to the basics. We have higher highs here, so price is an uptrend. The moment price came here and then failed to make a higher low, as you guys can see here, right here, then price started going sideways. Price eventually saw that it couldn't make another higher high, so it made a lower high, and price came through, broke through these buyers, and then it went back into a downtrend essentially. So that's kind of how you can analyze trends on a real chart, and we'll go into the Bitcoin chart here in just a second, where you guys will be able to see kind of how I spot my trends. So let's take a quick look here, and I want you guys to take a second here, take a pause, and kind of just tell me where you guys see the trend here of recently as a Bitcoin from October up to now in January 2026. So you guys, I have it marked out for you guys, but you guys can see, and let me know if that looks clear to you guys where the trend is going. So it's pretty obvious, right? Trend is going downwards because we have a higher high, then we failed to make another higher high. We made a lower high here at 115K. We came down, made a lower low because we got under this low of 107K. And then guess where price went? To that 107K area, and it failed to make another higher high, so the trend kept on going down. And so as of now, as you guys can see, we still have not technically gotten past this lower high. So price is still not in an uptrend. Price tried to do it here at the beginning of the year right now, but it rejected right off that zone, and I had this marked out for a few weeks now. So now we're gonna see if price, if we zoom in, is price gonna be able to make a higher low based off being higher than this low down here at 84K, and then break past this lower high, which would indicate a potential trend reversal. So this is where things get interesting. This is where setups start becoming really nice, and you're able to swing trade these or day trade these depending on your trading style. So I want you guys to ask yourself, if I was driving down the street and I saw it from a helicopter or bird's eye POV, it'd be much easier, right? Of course, because you see where the street ends, where it turns, you can see it from a higher POV. But if you guys are driving the street in the car, you don't know if that's a dead end over there. You don't know that there's a street coming up to the left and to the right. So the same applies in trading when you guys zoom out on your charts. So what I want you guys to do when you guys start marking out your charts, start learning trends, is I want you guys to go to the weekly time frame, to the daily time frame, and to the 4 hour. These are your best time frames on TradingView. So assuming you guys know how to work a TradingView, you guys are going to need to be able to look at the higher time frames. The higher time frames just simply give you much more accurate information in the sense that it's respected more. So the higher time frames are where the hedge funds and the banks play. So you guys are going to want to look at the higher time frames because you guys can see the trend more clear and the levels of where sellers are, where the highs are, where the lows are. Now, when you guys are day trading and you guys are looking for a trade, you guys can zoom into the 1 hour time frame. The 1 hour time frame simply gives you more information, more details of exact price points and exact areas to pinpoint essentially. So if you guys can look here, we zoom in here on the chart, we have this lower high that came up to here to 107, rejected, and guess where the lower low was? It was down here at these points, and these points got broken. Buyers try to step in one more time to see if we can get back above there, and it failed, and boom, we went lower to go find other buyers. So what you guys will notice when you guys start trading and looking at the charts is that price will always go to level of buyers. As you guys can see, there was level of buyers here, from this previous price action. There was levels of buyers here from this previous level of buyers. And if price is able to break down through here, through these lower lows, then $74,000 Bitcoin is imminent. So that's how you guys can use the previous trend, because if you guys can see, this was an uptrend. Price went up, made a higher low. Price went up, made a higher low, higher high, and then until it wasn't an uptrend anymore. But based off the previous trend, you guys are then able to know where your zone and key levels are, and that way you guys are able to take your trades based off whether you guys are bullish or bearish and target those zones. That's exactly how I trade. I don't overcomplicate it. I don't guess where price is. I want price to tell me where it's going. So that's why the higher time frames are so important. You want to use the 1 hour to zoom in, get a bit more information, and then the 15-minute is great for entries. And we'll go over this more in depth in these future videos that I'm launching. But for now, I just want you guys to focus on the daily, the 4 hour, and the weekly for marking out your charts and analyzing your overall trends. So let's see. Next point that I have to make is pullbacks. So back to the point that I kind of mentioned a little bit earlier, and I'm not going to go too much in depth because I don't want to confuse you guys, because I know you guys are still potentially learning this, and this is basic stuff, but the basics is really what matters, because this is what I found has made me a profitable trader, just focusing on the basic price action movement of the market. So pullbacks. So what are pullbacks? Trends, as mentioned, will not just go straight up or straight down. They have to have pauses and corrections and pullbacks. But essentially, if you guys can see here, price dropped pretty massively on Bitcoin from 125K all the way down to 107. Then guess what we had? We had a pullback back up to 115K. Price dropped down again, and price did what? Price pulled back all the way up to 115K again. Markets do not just move linear. So this move wouldn't have just went from 126 all the way down to 80K in one straight go. It's like a staircase down, as you guys can see. Staircase down, staircase down. So you guys want to know where these pullback levels are. Typically, I let the previous trend, as mentioned, dictate that for me. So I knew that this was a key level of interest because we had resistance up here. This was a level where sellers stepped in the past. And guess what? Sellers stepped in again right here when the trend changed. Pullbacks are normal. You know, trends are going to need to breathe. If you guys are swing trading and you guys are up on the position, and let's just say you're holding a position for multiple days, and you know that price wants to get to the next level of buyers, and you have a pullback happen, and your trade goes from profitable to break even, or from profit to less profit, you guys should not freak out as long as you guys are looking at the higher time frames and you guys are understanding that price is just simply breathing. So think about if you were going to climb a mountain, Mount Everest. You're not just going to run to the top of Mount Everest in one go. You're going to go to Mount Everest, then you're going to stop, then you might have to go down a little bit, then you might have to climb another, I don't know what they call it when there's side mountains or smaller mountains on top of a mountain, but you might have to climb another hill and then go to another one. But each single time you're going higher and higher, same way when you're going down. So guys, I want you guys to mentally visualize that and understand that price will always breathe and price will never just go straight down or straight up. So we're going to get into how to analyze reversals in another video, because I can make a whole video just on that alone, because that is the most key thing in terms of trading. That one of the most key things that I do is I analyze reversals, and I analyze when trends want to start going the other direction. So you might ask, again, as mentioned, lower high, lower low, lower high, lower low, lower high. If this breaks up and we make a higher low, well, that's a potential trend reversal. So it's not overcomplicated, guys. This might sound like basic information. What you guys need to do is you guys need to go into your chart, and whatever ticker you guys are playing with, go mark out your charts and start learning and analyzing where the trend is going. When you guys start doing that, trading becomes a lot more easier. And these lines aren't just random lines. These are, or random candles. These are actually points of information. So you guys need to look at every single area of interest in your trading and all the candles as just the market telling you information of where it wants to go. So to finish off here, guys, trends, they end typically when volume starts going down, when liquidity has pretty much been grabbed, especially in crypto where liquidations happen. Those are potential signs of a trend ending. So in this example right here on Bitcoin, price is not yet wanting to break this lower low. This doesn't mean the trend is over. However, these can be signs that the trend might be over. So price, came here, tried to come and grab another low. It didn't, it bounced. However, but it did not get over this lower high. So price tried to get over here and it failed. So we were going sideways here during December. This would be a no trend zone. So this would be an example of something you might not want to trade because price is simply not telling you where it wants to go. So for all we know, this push up here might lead us to a lower low here, and then we might come down and come bounce off of this again, and then we might come up. So you want to wait for price to tell you that the trend is over. So that would be every single time a lower high is broken and then a new higher low is made. So when that happens, you're in a reversal and the trend is over. So just think of it like a car going up a hill and it runs out of gas and then it just starts reversing back. So let's see. So kind of to summarize all this, guys, I know we went over a decent amount of information here, basic information, but just remember, guys, trend first, your entry second, and then your indicators are usually last. So you don't need to have a bunch of indicators here. I personally don't even use that many indicators. I personally just trade off price action. You guys want to just learn price action first. Learn what every single amount of information that the market is giving you simply based off how price is moving and how price has moved in the recent past or in the previous trend. You guys do not have to zoom out and back test 3 years ago. That's not how I trade. I typically trade on the 4 hour, the 1 hour, and the 15. So I might not even be looking at a trend from 2 years ago. I might just be looking at the trend that was happening last month. And that to me alone tells me key levels and I'm able to trade off that. So with that being said, guys, kind of to wrap everything up, the trend is direction. Direction gives you an advantage. Go with the flow of the market. Don't fight the market. Let the market carry you. And don't let it drag you. Don't go against it. Don't fight it. Trust me, guys. This will revolutionize the way you guys trade. This will revolutionize how much easier it is to make profits in the market. And this will just give you an easier time in the market. Trading doesn't need to be complicated. It doesn't need to be hard. Trading can be simple. Trading can be based off how you just react to the market rather than you trying to guess in the market. We're not here to guess. So yeah, guys, with that being said, if you guys have any question, drop them down in the comments below. I've got the Discord now that's opening up. You guys can join through the link in the bio. And yeah, I'm very excited to keep teaching you guys the next days and go more in depth on some of these concepts and terms. So with that being said, peace out, guys. Take care and have a good one.